Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the decline for the Australian dollar has extended, and as we can see, the market took the challenge to 66.8085 and was rejected. From the rejection, the market now looks towards a level of 67.3545, but still has much work to achieve to get a bullish bias back or reinstated, and therefore would need to see a break above 68.0515 to then trigger a rally onto 79 to 70 cents. Earlier, the Reserve Bank of Australia Governor Phil Lowe explained the latest rate hikes during his testimony in front of the Australian Parliament. Now that inflation is as high as it is, we need to make sure that inflation returns to a target in a reasonable time, Lowe said. Meanwhile, yesterday, the Australian job numbers came in under expectations after inking in of 33,500 jobs that were added, with the expectation or forecast that was looking at 35,500. Nevertheless, the market is still preparing itself into next week when the US Federal Reserve rate decision will be announced on the 21st of September, with a 75 base point rate hike expected. Keep an eye on this support though at 66.80, because a break here would give further indication to the bearish case and look towards 64.8090. However, one thing to note, or one takeaway from this technical pattern, is that the RSI is displaying bullish divergence, which in terms indicates that although we've seen the challenge of 66.80, could see a correction. That is, in light of the last time we challenged here back in July, there was a correction. So let's keep an eye on that level and also see how we look or fare out into the European Open. The euro is holding steadily around the parity level as the market awaits next week's US Federal Reserve rate decision, as the dollar index for the last 2 days has been relatively quiet, or more to the fact, consolidating around 109.5060. In light of the pattern, though, we do need to see a little bit more strength to come back into play to give any indication to a further rally, and maybe a break above 100.15 could be that confirmation, and therefore look towards 100.8090 to 101.3060, where this downtrend line comes in. Still keep an eye on the base though at 98.80. That is a key level because a break beneath there would give further indication to the bearish case and look back towards the 96 region. The dollar yen, well, the market is still pressing on this trend line, which is seen somewhere around 142.75. A break here would see further indication to the downside and look towards 141 as a potential target. Any upside attempts? Well, I feel the market was still a little bit nervous in taking that challenge beyond 145, 146, so we may again see a good return of supply if challenged. A little bit of disappointment when it comes to the sterling after the challenge to the top side around 115.7085 was rejected, and from there the market is now looking back towards the downside and overall keeping a bearish bias towards the region or target of 111 to 113. There is a little bit of divergence here though, so hopefully that could actually bring back a slightly bearish failure, and there is a bullish response, and therefore look towards that top side. But still a lot of work to do to get any kind of reinstated call to 118 unless we see that break of 115.7085. Finishing up with gold and oil. Well, as you can see, the market did take out the level of 1,680 overnight, and now from a technical point on the weekly chart here, we're looking at 1,635.42 as a target. We've got an ADX from a weekly and also from an ADX on the dailies to support the bear case. We're getting a little bit oversold though, but there is still enough room for another 20-point fall at least, and reassess from that bottom side, as I mentioned, around 1,635 to 42. And finishing up with oil, well, the market was a little bit weaker overnight after rejecting that top side level around 88.40.50. And from the rejection, the market is now looking down towards the down target of, that is, of $81 a barrel due to the break of 85.60. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.